Indian markets extended their winning streak with the Sensex and Nifty 50 rallying for the sixth straight session on March 24th. Strong buying in heavyweights propelled benchmarks to one-month highs. Nifty 50 surged past the key 23,500 resistance, while the Sensex jumped over 1,100 points, pushing markets out of correction territory. Global cues added fuel to the rally. A stronger rupee, easing valuations and renewed foreign investor interest supported the rebound. Foreign institutional investors, after a month of relentless selling, have turned net buyers in 3 of the last 4 sessions. Experts say the market is riding on robust domestic growth, easing inflation and a weaker dollar, which has made Indian equities attractive again. The strongest weekly gain in 4 years reflects optimism driven by expectations of a rate cut by the RBI on April 1st. The Nifty Mid-Cap 100 and Small-Cap 100 indices also climbed, suggesting optimism for growth stocks. Global brokerages say India's long-term growth story remains compelling, backed by digital infrastructure, economic reforms, and rising consumption. Now, Indian markets extended their winning streak with the Sensex and Nifty 50 rallying for the 6th straight session on March 24th. Now, this strong buying in heavyweights propelled benchmarks to one-month highs. Now, Nifty 50 surged past the key 23,500 resistance, while the Sensex jumped over 1,100 points, pushing markets out of correction territory. All right, to discuss more, we are now being joined by Ajay Bagga, a market expert, live from Mumbai. Welcome to the broadcast.
Thank you very much.
Now, let me begin by asking you, how should retail investors approach this market momentum?
As we have been saying, that even in the 6 months of downturn, we said stay invested. When the recovery comes, it will be fast and furious, and you will get year's returns in 2 weeks flat. We are seeing a good recovery. Last week, the benchmark indices were up more than 4%. The broader indices, small cap, mid cap, were up about 7% plus. So we are very much in a recovery phase now. Domestic situation is much better than what it was in September and December. The economy has bottomed out in September. Earnings are seeing a small uptick, and they will improve over the next financial year. And markets being forward, discounting mechanisms are discounting that in. And third, the valuations have become pretty reasonable, especially on the benchmark indices. They are lower than the 10-year median valuations that we have seen. So domestically, we are seeing inflation under control, monetary policy easing, with RBI already cutting rates once and expected to cut again on April 9th. Fiscal expenditure catching up now, leading to a better economy overall, and earnings on the recovery path. So overall, we would tell retail investors, stay invested and keep investing on a regular basis in the Indian market.
Now, you talked of valuations. According to you, are valuations still attractive after this sharp rebound?
Yeah, definitely. On the benchmark indices, we are at about 21 times when the 10 years median has been at 22 times. On the broader indices, there are pockets which are still overvalued. Those can be overlooked. But sectors like banking, sectors like financials, capital market related companies, public sector companies, power financiers, power related companies, all these are coming at pretty good valuations now. And then at higher valuations, defense stocks are looking attractive with the extra expenditure expected on defense within India and abroad as well. We have become good exporters of defense equipment. So we will benefit from that. So these are some of the sectors that look reasonable or priced reasonably for the growth that is embedded in them.
And well, what risks should investors watch out for in the near term?
I think the risks are global. The April 2nd Liberation Day that President Trump is talking about reciprocal tariffs. Last night we saw him talking of putting 25% overarching tariffs on any country that deals with Venezuela and imports crude oil from Venezuela. We have a large energy major in the private sector in India, which takes Venezuelan oil. The public sector companies have not got the US approvals to yet trade with Venezuela. So it's a minor issue. We'll be able to take care of it. But these kind of things are pinpricks in the sentiment. So it's more global. April 2nd remains a very big event risk. The good news is that US trade delegation is in India today. We are looking at negotiating a bilateral trade agreement with US that grows the bilateral trade to $500 billion in the next few years. So hopefully India will get some relief on the tariffs from the Trump administration. But April 2nd remains a very big event risk for the markets.
Right, and centering on tariffs, of course, is the biggest concern that's rolling on in the world. But thank you so much for joining us on the broadcast and giving your perspective.
Thank you very much for calling.